My mission is simple.
His mission is complex.
To make you money.
He's going to try to make money off you.
I'm here to level the playing field.
He's here to amplify existing inequalities.
For all investors.
For some lucky investors who have been paying attention.
There's always a bull market somewhere.
Some opportunities are unique. There is not always a bull market somewhere.
And I promise to help you find it.
He promises to mislead you.
Mad Money starts now.
Mad Money has already begun.
Hey, I'm Kramer.
I'm the psychic economist.
Welcome to Mad Money.
Welcome to Inverse Kramer.
Welcome to Cramerica.
The hell's Cramerica anyway?
If you want to make friends, I'm just trying to make you some money.
He's, excuse me, he's trying to make money from you.
My job's not just to entertain you, but to educate and teach, so call me at 1-800-743-CNBC
He's an entertainer. Don't call him.
or tweet me at Jim
Don't tweet him.
Kramer.
Maybe you should troll him.
If you had some cash from the sidelines today was terrific.
Cash on the sidelines. You should always have cash on the sidelines. Warren Buffett keeps 10% in cash. The dude's got $60 billion. That means that Warren Buffett is liquid usually for $6 billion. You know what kind of... He can jump on any deal he wants any minute, and so should you. I keep 10% of my portfolio in cash at all times. And when I see a new opportunity and I get into it, I have to sell out of a bunch of other things after the fact. You know, speed is what's important.
If you don't have cash...
No, there is no if you don't have cash. If you went all in, if you YOLO, that's your problem. You know the risk.
Then any session where the Dow plunges 406 points, the S&P plummets 1.76%, and the Nasdaq nosedives 1.99% is an absolute nightmare.
The House of Pain.
The House of Pain. Okay, I don't know how much of a nightmare it is. He's talking about 1 day slip, okay? I mean, we slipped for like 3-4 days last week. It went up for a day. And then like this morning, there was a huge rebound and then a huge dip. So it kind of went up and then it went down.
Given that September tends to be a nightmarish month.
I don't know if that's exactly true. We're going to have to fact check that, okay? So you're going to have to look back into history. Is September historically a bad month for stocks? Maybe not.
It's good to have some cash.
It's always good to have some cash.
So tonight, we're holding a coronation.
Okay, by the way, he usually throws in a lot of stuff that's true because he has to give you enough truth for you to be able to trust him.
Because right now, cash is king.
Cash is always king.
Regular viewers know that this market's been making me nervous for a while. I've been telling you to take some profits for the last 3 weeks.
He's been trying to get you to cash out of your portfolio. He does say, you know, snap some profits, but sometimes he was saying run on house money, meaning cash out of your whole portfolio. He was trying to tell you to go buy a sweater for fun for no reason. I don't know, man. That's
For my charitable trust, we've sold some of every single tech stock we own, including some very, very good
you got to secure the gains.
favorites that you're aware of. Every single one, first time in 15 years.
But he couldn't really tell you that until after he did it.
Because bulls make money, bears make money, but hogs, they get slaughtered. I love these tech companies, but I looked at the charitable trust cost basis in these stocks, and it doubles, triples, and quadruples. I looked at the price to earnings multiples and the gains everybody's got because they were all at their highs, and I said, you know what? We are out of our minds with greed.
Yeah, he's been saying that, but I mean, if you're in the stock market in the first place, yeah, it is all about greed. I mean, there's a lot of gambling going on, and we've known this entire summer that the stock market didn't make any sense. Okay, we're in a split-screen economy where things are really bad for some people and things are just business as usual for some people. And a lot of us are looking at these prices and we know that it is not reflective of the true economy out there. And sooner or later it's going to catch up. Might be tomorrow.
You got to be disciplined. And in my book, that means taking profits while you have them. Now, I know some of you will...
That might not be discipline, taking profits while you have them. You might have a longer plan. What if you have a longer time frame? If you have a year time frame or a 5-year time frame, then looking at it going up and down every single day, that might drive you nuts.
People say this violates everything you've ever heard about investing. Buy and hold, don't overtrade, think long term. Or most recently, or I should say, stocks or stonks only go up. Only go up.
Well, as long as we have inflation rate and an inflation-based economy, stocks better keep going up.
But there's one rule that supersedes all the others, and if you don't know it, write it down. Discipline trumps conviction. That's the most important concept in the business.
That's true, and he does have to give you some truth here and there.
No matter how much you might love a stock, discipline says you need to start ringing the register when you've got a gigantic gain.
No, I disagree. Okay, inverse Kramer is all about this, okay? He's trying to get you to tap into your greed, okay? He's trying to get you to motivate by greed by pulling out a little bit you can so you can go buy something you don't need at Walmart. True discipline causes you to be able to not be fazed by these ups and downs in the markets. You can sit back and stick along with your plan. That's what conviction is all about.
That's why we sold some of my most beloved stocks for the Charitable Trust, which you can follow along by joining the act.
Okay, but he's talking about trading. I mean, along the way, whatever your long-term plan is, you should be buying and selling along the way to kind of, every time it goes up, sell a little bit, every time it goes down, buy a little bit. Just ride the wave as it goes around,
ActionAlertsPlus.com club. When we made these sales, I literally hid in my garden's tomato aisles because I felt so terrible, so horrible. It hurt. But that's what happens. That's what discipline is. It can hurt. It means you can raise some cash, though, before the market turns into a slaughterhouse. And that's what it did.
Man, that sample of the pigs getting slaughtered is really super creepy, okay? I mean, that is high-level terrible, and that should not be on CNBC. I mean, I doubt little kids are watching this, but that was really overly brutal.
Last week. Yeah, the selling worked. Conviction can make you money, but discipline saves you money. Now, by midday Tuesday of this week, stocks had come down so hard, so fast, 10% decline in 3 days, that I fully expected a bounce, and I told you we would get it. It's exactly what we had yesterday.
Is that what happened? I mean, I thought he told you to take something off the table.
On Tuesday night, and again yesterday, I told you have to sell something into strength if you hadn't taken anything off the table yet.
Yeah, but he's telling you that a day after the fact. I mean, Jim Cramer's show usually comes out after market close. So whatever he's talking about that day, it's too late for you to react to that. So you got to realize that there's a few million people out there who watch every word Jim Cramer says, and the next day, some of them may actually do whatever he says, okay? So that's what inverse Kramer is all about. You got to anticipate that, and you got to think about what could the opposite of that look like. That doesn't necessarily mean that you should do the opposite. It's just that as a hedge, you should know the inverse of Kramer.
Because you don't want to go into a brutal session like this one with no cash.
It's okay to go into a brutal session like this with no cash. I mean, you have your conviction, right? I mean, you make your investments, and then you buy and hold, and you wait.
It's why I always tell you not to buy stocks with borrowed money.
You shouldn't be buying anything with borrowed money.
Stocks aren't like a house. You can't live in them if your investment goes down.
A house isn't even like a house. A house is an investment these days, a bad investment at that.
Try sleeping in Nikola or Occidental. Right now we have about 15% of the portfolio in cash for the Charitable Trust, and that's a very high amount. Why so much cash? Okay, first, the market's given us some incredible gains, and including, by the way, at the beginning of September, I hate Septembers. Historically, it's been the toughest month of the year. You hear all these well, August usually there.
We gotta fact check that. We don't know if September's always the worst month.
There, you'll go in May, say whatever. No, it's September. It is always a bad month, almost always the worst. Second, as we pointed out with Carl.
Okay, then the inverse of that would be that September is going to be a good month, or at least this year is going to break the mold.
Carly Garner's terrific chart work last night. You know I believe in her. The risk reward here is not so high. Garner explained that we could go up a bit, which we did this very morning, but after one last gasp higher, she predicted maybe a big downdraft. When the potential upside is much smaller than the potential downside, you got to take something off the table. You know I think Carly's money. That's why I presented her charts last night. Third, Washington. All right, there's a ton of frustration with our political leaders who can't seem to come to any agreement on a stimulus deal. Now, maybe you don't feel it unless you work in an industry that's been tracked.
A lot of people are anticipating stimulus, and some people argue that a future hypothetical stimulus is priced into the market because a lot of decisions people have been making is dependent. It's kind of on making the assumption that there is going to be more stimulus coming in. That could be wrong, but maybe they'll surprise us.
By the pandemic. But when restaurants or gyms are only allowed to operate, say, at 25% capacity for public health reasons, they're not going to stay open. They can't. Don't get me wrong. We need social distancing. I take the virus very seriously. You know that. I'm Mr. Mask. Remember my contest? It's just that we also need...
This guy's an anti-masker.
Some major government intervention, some business interruption insurance, or else pretty much every cafe and bar is going to go under. Now, maybe you don't care. Maybe it doesn't matter. You still have Chipotle, right? Chipotle be in business. Olive Garden's going to make it. Maybe you got Wendy's a lot. Wendy's pretty good.
Chipotle, Olive Garden, Wendy's. Why would he mention those? He's trying to say that they're always going to be fine. Forget about the bars. Forget about the restaurants. He's trying to implant in your subconscious that Wendy's, Chipotle, and Olive Garden are going to be stable and can survive the 25% occupancy.
I like a Big Mac, fries, Diet Coke.
He doesn't like the Big Mac.
You get my picture. But I know because I own I hope not, I own a small plate Mexican place in Brooklyn.
What was that word? What was that thing about? I mean, he had a Freudian slip and he had to correct himself about owning or owned a place.
It's a bar. Bar San Miguel. Now, what's going on there? Well, we've been closed. Bars are apparently too risky to reopen. Hard to make money when you're closed. Take that from me.
Okay, it's in September and we're talking about this still. I mean, this is something that we were going over in March and April. And
now the mayor's going to let us open again so long as we operate at 25% capacity and nobody sits at the bar. Well, there's good. You have a bar, but you can't sit at the bar. Who the heck wants to run a tavern when you lose 3/4 of your potential revenue, but all your costs stay the same? If we could even have half the number of people, maybe we would only lose a little. But right now, I'm thinking it's crazy to keep running this thing, even as it was always a labor of love. And we had been pretty profitable before the pandemic over an 8-year period. Now think about the millions of establishments that aren't labors of love. That's what matters.
He's trying to get you to tap into realizing that a lot of these places are going to lose money if they open up and try to do not max capacity. I mean, yeah, because that's true. If you were running a restaurant, you were doing 1/4 of your business. I mean, it might be better if you just stayed closed.
They're just regular businesses, not to mention the millions of people that they employ who are going to lose their jobs when it gets cold.
All right, well, these are jobs that were not there all summer. So we're talking about reopening and then closing again? What is he talking about?
We're looking at a small business apocalypse again, unless Washington gets its act together. The fact that Congress can't agree on a plan is...
We already have a small business apocalypse. It's just that the mainstream hasn't caught up to it or something, or the market hasn't caught up to it. He's talking about like this is something that's going to happen, but this is something that's already been happening. It's entirely possible that the market is just going to continue to ignore that the small fish are not going to be able to swim. Maybe some things won't change at all. He's trying to get you prepared for some brutal action later, but maybe the stocks will just continue to go up.
It's pathetic. Fourth, even though stocks have come down hard in the past week, that doesn't necessarily make them cheap.
They didn't come down hard in the past week. I mean, we lost almost a month in some tech stocks. I mean, it's not really a huge... when you zoom out at the 3-month or the 1 year, it's just a blip.
There are plenty of COVID winners in tech that still trade at nosebleed levels, and they can go higher.
I mean, Peloton saved my butt this week. I mean, that just went up and up and up. My overall portfolio didn't really take a huge hit like the way he's... I guess he's trying to talk to people that are invested in only tech stocks. I don't know.
But wow, it's not great, especially in an election year where one candidate's eager to raise taxes on capital gains, which some people may want to take now.
He just told you to sell now because of your capital gains, because Joe Biden's going to put them up. If Donald Trump wins, you'll be fine. But if you believe Joe Biden is going to win, Jim Cramer's trying to tell you that Joe Biden's going to raise the capital gains tax, so you should sell now before that happens. So if that is something that he's trying to implant in you, that's something that's going to happen after November, sometime in November, December, because it's going to take us 2 months to argue back and forth with each other about who actually won. And once we figure that out, the market will react. I think that might actually be fortunate, having 2 months of us arguing over who actually won, because then instead of having one moment where the market reacts, the market will have like a few weeks of uncertainty. That's going to be interesting.
Ahead of maybe his victory, and the other one keeps ratcheting up tensions with China to the point where I have to check this Twitter feed every second.
And then, okay, so then on the other hand, you're afraid if Donald Trump wins, the market is going to react to anything that having to do with China, though. That should already be priced in, because earlier in the year, people were trying to avoid China stocks.
Finally, there are some increasingly glaring negatives. The price of oil goes down 10%, and what happens? Suddenly we get a bunch of oil stocks that can be knocked over by a feather. It doesn't help that regulators in Colorado this afternoon just made it harder to drill.
Good, I'm glad regulators in Colorado made it harder to drill. There's plenty of oil. We have too much oil right now. And when the airlines come back, if they do come back, then oil's going to go right back up through the roof. But we still need a few more fossil fuel companies to die first. We have to wait a little bit longer before we can let the oil come back up.
Meanwhile, the banks are horrendous again. Today we learned that Michael Corbat, the CEO of Citigroup, is retiring in February.
The banks are always going to be horrendous. The banks are being eviscerated by Venmo and Cash App, Square and PayPal, Bitcoin, Lending Tree. I mean, we're not going to need banks pretty soon. I have a Robinhood debit card. I have a Venmo debit card. There's a few things that I do that I don't go through the banks at all for.
To be replaced by Jane Fraser, the current president and head of consumer banking. Corbat's done an incredible job by many metrics. Said he's making much more money. It's way more efficient. He's returned massive amounts of capital to shareholders. You'd expect the stock to be up huge, right? But this market hates bank stocks.
Yeah, you're right. This market does hate bank stocks, and that's good, because with or without the pandemic, yeah, even without coronavirus, we're looking at the tech revolution and seeing how we're running the banks out of town. What are you going to do about it?
They don't go higher no matter what you do.
He does want to implant that in your head, though. This might not be one of those situations where he's telling you something that's true to get your trust. This might be something that they want you to internalize for some reason.
Which brings me back to the need for cash and the coronation tonight.
Well, okay, if we do have a second lockdown, if we do have a second wave coronavirus, there is going to be another run on cash. And even without the coronavirus, before winter, sometimes there is a run on cash, because you're going to need it for Christmas and staying inside, being cold and everything. Harvest, right? You go through the spring and summer growing things, and then you harvest.
If we hadn't sold so much stock for the Travel Trust, today would have been a horror show. We'd be sitting there looking at the prices and beating ourselves up for not taking profits when we had the chance. We certainly wouldn't be looking for any buying opportunities. No, we've been sweating bullets, and if we were on margin, we'd be holding on for dear life. Take away the tie, take away the shoelaces. If you got cash, though, you know what happens? You don't need to sell off with your bat on your shoulder. You wait for the perfect pitch. You can do it.
All right, having he's tapping into the greed. Having cash is just potential to buy, and yeah, that can make you feel better, because if you have a few hundred or whatever your level is, okay, depending on where you're at in life, having a certain amount can make you feel like you have some freedom or security, okay, and on days like this, having a lot of cash, you can be tempted to buy into something that might not have hit bottom yet, or might not be a good investment in the first place yet. We are still in a bubble. A lot of these people on TV are talking about this huge crash that we had, but no, it's just a tiny little dip, and it's not like that this is even a huge buying opportunity or anything. I mean, because there is still a little more downside. But even if you didn't have cash or did have cash, don't freak out when you see what happens today. It's just a little bit of a dip. It's not a big deal. But he's trying to say that if you did have cash, then today would be the big great buy-in day. I don't think that's true. I picked up positions today, man, like 1 or 2% of my overall portfolio. I mean, I didn't really move that much cash today. I'm still at the 10%. It was but it was an opportunity. The two stocks I bought today, which I will not name here, they're things I wanted to buy anyway. You know, one of them is a play for a place that I think will stay open if we have a second wave, and the other thing I'll tell you later.
I mean, it actually, at one point, I don't want to say it because people lose money, but it actually felt good. It felt like a doubleheader, 7-inning games. Cash gives you a superior attitude and a superior state of mind.
Cash gives you a superior attitude and a superior state of mind.
To borrow my favorite line from that Steven Seagal classic, Hard to Kill, it allows you to sit back and look for discounts in the stocks you most like. Given that we haven't given up all of yesterday's gains, let alone tested the lows, I took the day off from Charitable Trust, think more about the big picture and, of course, the Chiefs game and fantasy. Cash allows you to do that. It allows you the freedom and security, which is why it's so great to have it in your portfolio, especially when it's king. And we're in no hurry to spend our cash for the trust. There are a lot of stocks I've told you to buy on a pullback, but can we have the pullback, please, before we buy them?
He's kind of contradicting himself, I think. Because there was times where he was making it seem like pigs were getting slaughtered today, but now 9 minutes later, he's saying that it's a pullback, but can we have a huge pullback first before buying back in? Which is kind of like what I just said, how I think there was still some more downside.
And that means you got to do a little waiting. Without a lot of cash, you'd be forced to sell something into weakness if you wanted to do any buying. If you borrowed money, your broker might be forcing you to sell at a loss. Bottom line.
Never sell at a loss.
September is going bad. It's a bad month.
September might not be a bad month.
Okay? Maybe this is the one in whatever.
It's probably not the one in whatever.
But these sell-offs go down a whole lot easier when you've got a sizable cash position. So please,
regardless of whether you have a sizable cash position, days like today are what it is.
If you haven't already done it, register. I'm sure it'll try to bounce again tomorrow. That's what it does.
Now he's predicting that it might bounce again tomorrow. Ah, geez, that might not happen.
Get your head clear, do a little selling, and let stocks go down to the levels that we said are actually attractive.
Okay, he wants you to see the next dip as a buying opportunity. That's scary, man, because inverse CRAMER, let's say this thing like really dips and then keeps dipping, and then we just have stagnation throughout the entire winter. You're going to feel like an idiot for buying the day after Jim CRAMER told you to buy. Alright, well that's interesting. That looks like what we learned here, okay? Jim CRAMER sounds like he's trying to tell you to... Okay, you should keep a cash position anyway. 15% does sound like a lot, like you're getting ready for a buy. And that is typical for if it's like after a huge sell-off of a bunch of things that you got. But he's saying it's going to bounce again tomorrow, but let it dip more. He wants you to not freak out when we start to see things really dip soon. He wants you to keep a positive attitude and think of it as a buying opportunity. So we're going for create total global collapse, or at least stagnation throughout the winter. And you're going to get tied up. It doesn't look good. The alternative is that not only we're going to see a bounce tomorrow, but it's going to go to the moon. And markets don't make any sense. And the stocks are going to just keep going up. And he's going to feel like an idiot for closing out of his positions the way he did. You're going to feel like an idiot for closing out of your positions tomorrow at the first sign of a bounce. Don't do it. Wait, before I go, we got to end the video. I thought that was such a good ending, I just stopped it. But
don't miss a second of Mad Money.
You don't have to watch Mad Money because I'm going to give you the inverse of CRAMER. So not only are you going to get CRAMER, but you also get the inverse as a hedge.
Follow @Jim CRAMER on Twitter.
Don't follow him on Twitter. You should follow me at Infinite Brit on Twitter.
Have a question? Tweet CRAMER.
Don't tweet CRAMER. You should tweet me instead.
#Mad Tweets. Send Jim an email.
#Mad Tweets. That is garbage.
Email to madmoney
Don't send him an email.
@cnbc.com or give us a call at 1.
Don't call them.
800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Alright, let's try to play a little bit of that song, shall we? I got my 1976 Ibanez Les Paul ready to go. Okay, something like that. So the inverse of that would be in B flat. That was an E. And that one was a little bit fast, so the inverse of that would be slow. Mad Money starts now. Alright, we'll figure that out. We'll get more on that later. Maybe I'll actually record the theme song or something. But anyway, thanks for watching Inverse Kramer, where we try to do the opposite of everything Jim Cramer says. And by the way, I'm not a licensed financial advisor, and I do not give financial advice. And neither is Jim Cramer, okay? He's a performance artist, and so am I. So any decisions you make with all this stuff, that's on you. But if you're going to make decisions based on Jim Cramer alone, then you got to do your due diligence, and you have to check out the inverse and consider the opposite as a hedge. Goodbye, everybody.